All righty, folks, he did it again. Yes, Mr. Dan Bird nailed it. He told us he suspected that the unemployment rate was going to go down when many of the economists thought it would go up. What does he have in store for us today? We're going to talk about Friday's amazing jobs number. Is it real? Is it fake? Doesn't matter. Then we're going to talk about inflation because we will get CPI on Thursday and PPI on Friday. What does he say is coming? Mr. Bird, got to give you some flowers for that great call on unemployment going down. Nice work.
Well, it's just data. I mean,
Just
I don't
did.
really, I don't really know why the economists didn't think it was going to go down, or at least stabilize. Definitely not wasn't going to go up based on the data. Now, next
Yeah,
month might be different
right.
because
Yeah.
of the data, but I'll show you why. And I put it in the newsletter last week too. Why?
Mhm.
But the claims numbers have been going down for a month straight.
No, yeah, they've been going down. They broke trend. We were over 240, I think, for a brief
Yeah,
minute. Then it went all the way down to like 218. I think they did go up slightly last week to 226. But yeah, we're below that 230 number that we've been in that channel for a while now. So yeah,
right.
you're right.
Yeah. So that by itself should tell you that the unemployment rate. Now the jobs number is different. I don't necessarily watch the jobs number
Right.
because that one does get revised downward or upward month after month.
Yeah, I
So
think yeah.
can't put much credence in it on a month to month basis. And the press number talks about it when it goes down
Yeah. They don't talk about the revisions
three months for 3 months in a
818,000.
row.
Yeah. I think
So
11 out of the last 12 months has been revised down, something like that.
yeah, so I focus on the unemployment rate because it's a better indicator, and
I like it.
they can't really play too much with that one.
Yeah. Yeah, there's a lot of seasonal adjustments, part-time, full-time, double counting.
Right.
It's funny, I did a show, the Daily Financial News this morning, saying I don't really care if the number's fake or managed, blah, blah, blah. I care about what actually happened. And the
Hmm.
cost of capital got wildly more expensive on Friday.
Yeah. Yeah.
The
How about
entire
that?
the entire yield curve jump. And mortgage rates now are over 6.5. They had a
Right.
violent move of over a 20 or at 27 basis points in a single freaking day. That is
Yeah.
unheard of. So that's what I care about. This gigantic move, if it has staying power and it doesn't give some of that back, it could fundamentally change the dynamics of refinances, purchases, cost of building. I mean, this that cost of capital was a violent move.
Yes, it was, and I think it was surprised quite a few people too.
Oh yeah, yeah. I mean, think
Well,
about this, folks. Mortgage rates are up almost half a point since the Fed cut half a point. I mean,
right.
play with that in your brain for a minute.
Yeah, but like as you've said, that the Fed can play with the short end, but they
Correct.
can't necessarily control the long end,
Mm-mm.
other
Oh,
than over time they will. But
yeah,
uh,
a
uh,
general nudging. But no, this is important because I think something you pointed out, and we'll get into it in a minute. But even the experts, they're calling CPI headline to go from 2.5 to 2.3.
yeah, I know.
Now core is going to stay flat at 3.2. Again, that's their
Right.
call, but it's wild. We have
That's what I said it would be 2-3.
yeah, yeah, we have
I
collapsing
actually said it might
inflation.
be lower, but because of commodities, and I'll show you the charts. I'll show you the data in a minute.
Yeah,
But 2-3, I think is probably right. That's
I
probably what
mean,
it's going to be.
think about this. We've got falling, arguably collapsing inflation. We have a job market that's again based on the numbers better than last month, and we're at a rate cutting cycle. Is the Fed going to actually thread this needle and get this darn soft landing? I mean, is that what we're looking at here, or no landing maybe?
Yeah, I think so.
Wow,
I think so. That's in my newsletter this week. All my cartoons were about soft landings.
that's amazing. Yeah, I mean, again, and think about it. I mean, I read an article over the weekend. There was something like 31 or 37 rate cuts. The only country that raised rates last month was Japan, or the month before. But yeah, we're in a worldwide rate cutting cycle. The
Mm-hmm.
U.S. economy, again, on the surface, looks really good, but yeah, it's wild. It's wild what happened to mortgage. Really, cost of capital going up last on Friday was that was a crazy jump.
Yeah, we'll see if that lasts. I'm not
Yeah,
convinced it's going to last
know,
that long, but
yeah, I hope not. I mean, that was, yeah, if we go up from here and we go back towards 7, that'll be a problem, in my
so
opinion.
what do you think the Fed's going to do in November?
I honestly, I don't know how they cut. And I'm the guy who said they're going to give us 50. But I have no idea how you cut with these numbers. I think the most important thing happening next week's actually not CPI. It's Michelle Bowman's talk on Monday. She was the lone dissenter in the Fed. She's the outlier on where the neutral rate is.
Hmm.
All the other Fed presidents think neutral is between 3 and 3.5. She thinks it's 4. I think we might see more and more Fed presidents pull that neutral rate up to 4 instead of 3, which means a lot less cuts coming. And maybe, dude, we could have no cuts the rest of the year, possibly. These numbers are wild to think
So right now we're at what, 4 3/4?
about. Yes, 4 3/4, yeah.
Roughly 4 3/4, 4 8, something
Yeah,
like that.
487, yeah.
So 4 would imply 3 cuts,
Hmm.
right?
Yeah, they're implying 3 more cuts. And again, so you asked me what my call is. Um, I think they're going to give us a quarter. I think they've made their bed. I think they're going to cut a quarter in
Yeah,
November and December. So I think we'll get a full 100 basis this
right.
year.
That's
That's
right.
what I think.
I agree. That's what I think too. That's what I've been saying all along. I think
Yeah,
that's what they're going to do.
I just, but again, I mean, you could look at the numbers and go, I mean, that's a legitimate question. Why are you cutting? That's a legit question.
Well, it's just as legitimate as asking why they raised as much as they did, right?
Yeah, it's a legit question. Yeah. Yeah. And the answer, folks, not to
Sometimes
steal
you
from,
raise a little too much. Sometimes you have to bring it back a little bit.
yeah.
You might, you might overshoot to the other side and then come back up again. It's not a perfect science.
No, it's absolutely not a perfect science. I do think the rate cutting cycle has started. I think there's going to be less rate cuts than maybe people are expecting. I don't know how they do anything but quarters from here. They can't give us a jumbo. I was wrong on
That's
that.
right.
Um,
I think so. And I think there will be fewer rate cuts next year than people are
Agreed.
expecting. But
That's
I,
the humdinger of this. You're absolutely right.
right. Yeah, I think they'll get down to 4 1/4 and maybe one more in January, 4, get down to 4.
Yeah,
And in fact,
I
in
think
January,
that's
they
it.
might not do anything. They might just hold it for a month.
I think you're right. I think again, that's why Michelle Bowman's talk on Monday. I'm going to be paying attention to what she's thinking. Does she get more vocal about the neutral rate being? That's what next week is. I think we have 11 Fed speeches, and 10 of them ex Michelle Bowman. They have some explaining to do. Why'd you was because they're going to have to answer the question: was it 50 an overreaction? Uh, they're going to be asked some hard questions, I think, and it's gonna be
Well,
fun to watch.
and that's fine. I mean, people should ask hard
Of
questions, but
course.
but I don't think it was such a stretch to go 50 last time. I mean, they should have gone a quarter in July. They didn't. They went 50. They had no meeting in October, and then they go a quarter in November. So that's 50 over a 3 month span. I don't think that's outrageous.
No. Yeah, and again, I think this is all about getting closer and closer to neutral. I think everyone would agree that even today, at 4 3/4, we are restrictive. I think for the Fed to land this soft landing, they've got to get closer to neutral. Um, so yeah, that's why I think we got another 50 basis points coming November and December.
Yes, I agree.
So we'll see. Well, why
Well,
don't you show us what happened on Friday? It was wild.
let's take a look. Some interesting stuff happened. So first, let's take a look at. Can you see this, by the way?
I can. Yep.
So here's the claims number, and this is why I said we'd probably go to 4.1. Now you can see the bump there last week.
Mm-hmm. Yeah,
Right here,
last
the
week
red
was
one.
up. Yep. Yep.
But it was only one day in September in that number.
Oh, that's true. Right. Yeah. Right. The Monday. Yeah.
Right. So all the rest of these, remember unemployment rate is a monthly number, whereas the claims are weekly numbers.
Correct.
So if you look over the last 4 weeks, it's basically dropped off a cliff. If you
Yep.
take out last week, the red one there. So that's why I said we're probably going to go to 4.1. That's what happened. Went to 4.1.
Yeah. Okay.
Which actually is
There you go. Yep.
right down there, 4.1. All right, so I think next month, however, it's going to be a different story.
Well, I think next month is going to be, yeah, it'll be a different story. I mean, we obviously have the country is suffering from a horrible hurricane, which
Yeah.
clearly has displaced millions of people. That will show up.
Yes, the hurricane and the dock strike, which was only 3 days, but it'll
Oh,
still
yeah.
be in the next month's number.
Yeah.
So, a number of things, and we'll continue to watch this. We'll watch this for the next month, next 3 weeks.
Yep.
And if this continues to climb, then that will confirm this will probably go back to 4.2. But Powell said in his speech last time he's expecting 4.4 to be
Yeah, he
normal,
did. Yep.
right? So
Yep.
he's got plenty of room. By the way, speaking of the hurricane, we've got another one coming.
Yeah, I saw that. Is this kind of where you're at?
I'm at this blue dot right here.
That's your, oh, be safe.
So this morning, this line was going right over Tampa up here.
Okay, so deviated.
So in what, 3 or 4 hours, it's moved down to here.
Hmm.
Now it's going to hit around Sarasota, but I expect it to continue to move south.
Uh-oh.
So because, these things are pushed by the fronts in the US, in the,
Correct. Yep.
The lower 48, the front will push it further this way.
Further south.
Yeah. So that's a category 3 right there. Oops. Can't click on it. That's a category 3 right there.
Okay.
When
Is it
Ian hit
expected to strengthen?
No, I don't. It's going to strengthen from where it is. It's not quite even a category 1 yet,
Oh, okay.
but it
Oh,
will strengthen from where it is right now. This is Wednesday. This
oh,
one right here.
Wednesday. I didn't understand that. Okay, that's Wednesday.
That's Wednesday. It'll be a category 3. When Ian hit 2 years ago, it came directly on this little dot that says Cape Coral.
Yeah, almost up that channel, right?
It hit directly right there, perpendicular to the coast.
Right.
And it stopped for 6 hours, just like Helene did over Tennessee.
Yeah. Terrible.
Which is what really caused all the damage, the fact that it stops.
Yeah.
So if this one doesn't stop, if it moves pretty quickly, we're still going to get storm surge if it keeps moving south.
Mm.
But I mean, even in Ian, which was a category 5, by the way, when it hit,
Right.
which is a 3, I had no damage from Ian.
Yeah, you had a couple of roof tiles, as I recall.
I had none for my house, but my sons who are
Oh, that's right.
Both of their roofs got destroyed in the end. I had no damage at all. So anyway, that's what it looks like.
Yeah, be safe out there, folks.
We'll see how that progresses.
Okay.
All right, so let's take a look at CPI.
Yeah.
For next week.
And yeah, we both think CPI is, just given the numbers, it's going to go sub 2, right? Headline.
No, right now they're forecasting 2.3.
I'm sorry, I wasn't referring to this week. I was referring this year.
Oh, eventually, yeah.
Next 6 months.
So let's talk about that. So here was last month. Last month went from 2.9 to 2.5. Right, 2.9 to 2.5. Forecast was 2.6. So now it's at 2.5. The forecast is 2.3. You can see the big one that dropped off last month. And just for those that don't understand the base effect for headline CPI, it's basically an average over a 12-month period. So just doing math, it's just pure math. If you drop off a big number from the front end here and you add a smaller number to the back end on this side, then the rate goes down.
Exactly.
So it's just math. That's all it is.
Just math.
Right. So this big one dropped off, and so it went down by 0.4. Another big one's going to drop off, almost as big, not quite, but almost as big as this one. But we'll look at the commodities in a second, and that's why I think it's going to stay at 2.3. It's not going to go lower than that.
Okay.
Then look what happens the next 2 months. So this is October. Here's November, December. You got a little one in November, which actually might cause CPI to go up.
It could, yeah.
You got a little bit bigger one in December, but it's still a pretty small one, which could make it stable or even go up a little bit more. And all through this period right here, what I'm predicting is all of the talking heads are going to be screaming that we're back to the 80s, inflation's coming back.
Yep.
See, we told you so. We cut too early, cut too much. Inflation's coming back. We're going right back to where we were before. But we're not. And inflation is not coming. Because what happens between February and May is we've got a bunch of big ones again.
Yeah. And
Really
that's where
big.
it's going sub 2.
That's where we'll go below 2.
I agree.
And it could go down to 1.5.
Oh, I'm not.
It could.
Sure.
I mean,
could maybe.
I don't know what else happens.
Right.
But
sub two is a layup.
Yeah, sub 2 for sure through this period. And then we've got a bunch of flat ones. We've actually got a negative one right here.
Yeah.
When a negative one, now this has to, this is 10 months from now. Right. But when a negative one drops off, then it pushes CPI up on the front end. So that's that right there. That negative one right there is this down here. That's deflation below 0. All right. So that's why I think CPI is going to come in 2.3. I said that because the jobs number is going to look pretty good, the market will probably take off. The market is doing really well.
Yeah, it is.
I think this is going to further be another catalyst, which I talked about a month ago, about September being a bad month, but we've got some positive catalysts that might switch that around.
Yep.
And jobs and CPI and the Fed cutting, those are the 3 catalysts that I talked about.
You got them right.
That's all happening now, and CPI is going to be the next one. And I think the market will continue to go higher. So if we look at, by the way, this is my website for those that are interested, breakpointtrading.net. And my weekly newsletter is right there, this little button, if you want to get that. But S&P right there, you can see it. This is a very bullish chart. It came down here in July to August, then it came up, came back down, just a little below the 50-day moving average, went back up, came down to the 21-day, and then on Friday bounced, and that's a very bullish candle right there. It's a hammer. I think it very likely, I mean, it could kind of tread water waiting for the CPI number, but I think everybody's expecting it to be a good number. So this could actually break to a brand new all-time high Monday or Tuesday, or for sure after the CPI.
Okay.
It'll get to a brand new all-time high. Now the NASDAQ has been struggling a little bit more, but it had a good day on Friday as well. It's got this resistance to get through right here, but it could also get above this high. It'd have to get way up here to break to a new all-time high. But it probably is going to get pretty close to it with that CPI number. And then we're going to have a couple of week lull before the election.
Yeah.
And I kind of expect the market to just sort of tread water.
Well, the other thing that starts up late next week, I haven't checked. Usually financials start posting earnings Friday.
Yes.
Right. Which I think the financials are going to be uglier than people expect, net interest margin and things like that.
Oh, okay. Well, that's interesting. You should say that. Let's first let's take a look at financials.
Yeah, I think
so here's what's coming next week. You got see if there's Bank of New York on the 11th, BlackRock the 11th, JP Morgan on the 11th, Wells Fargo on the 11th.
Where's JP? Oh, JP Morgan, there it is.
Bank of America on the 15th, Citibank on the 15th. So yeah, next week you get quite a few financials reporting next week.
Yeah. Okay.
So that should be interesting. So let's take a look, by the way, on my charts page. One thing that I update every week are these industry groups, and this is a weekly view. So it's the green ones are the top 10 for the week. The red ones are the bottom 10 for the week, industry groups.
Interesting.
And you can very quickly see which sectors are doing the best. Look at that. Energy. Every single one of its industry groups are in the top 10 for the week. But the second best one is financials.
Interesting. Okay.
Right there. So if we look at financials, the sector, there's what it looks like.
Oh, wow.
It's getting ready to break out to an all-time high, a new all-time high.
I'll take the other side of that.
Yeah. I won't. I think financials are going to continue to do well. I think the hikes in the 10-year is going to be temporary.
Okay, let's talk about that. Because that's the key.
Here's the 10-year yield. You can see a big bounce right there. But it was already heading up. So, I mean, it came all the way down. So it obviously would have a reaction rally. And you can see where the pink one crosses the blue one right there.
Yep.
That's the short-term signal that happened even before Thursday. That signal happened. The 2-year yield is the one that's really causing all the havoc on the short end. The 2-year yield is now above its moving average. And bonds are taking a hit as a result of that.
Yeah.
Right. And the yield curve is starting to come back down to zero, by the way.
I saw that.
Right. It's not there yet, but it started to come back down. But I think this is going to be temporary. I think it could get up to around the 200-day moving average right there, around 4.142.
Okay.
Yeah, somewhere in that neighborhood before it starts to turn back around.
And now, when you say turn around, are you making a call for next week, next month?
It could. I don't think it'll be next week. I think it might. I mean, the CPI could have an effect on it actually, but it's sometime in the next couple of weeks.
Okay. Yeah, I'm just trying to get a feel for timing. Okay.
This, by the way, is my market bias matrix, where I take all of these different indexes, sectors, industries, relative charts, commodities, metals, and currencies, put them all together in a short-term, medium-term, long-term, and then kind of rank all of it all together, and it gives us a sense for what the overall market's doing.
Got it.
So this one chart right here, I update this every day, so of course I look at it, but anybody on my site should just look at this every day just to see what's happening. And you could have right here seen where that rollover was going to be. This orange one is the short term. And you could have seen, within 2 days after it started, where the rally was starting, which was right here. Same thing over here. Rally was just starting right there. So you get a good sense for what the market's doing. Now, when this came up and then it went sideways through this period here, I thought maybe it was going to roll over like it did here. And it still could, because you can see there was a little bounce right there in the middle.
Right.
And we got a little bounce right there on Friday. But I think CPI is going to push things higher.
Okay.
So the 10-year is right down here too. So you can click on any of these. It's the same chart that I just showed you. So there's the 10-year. But also in my trend models under indexes, this gives you the same short-term, medium-term, long-term, but it shows you exactly when they change. So you can see the 10-year right here, the short-term changed on September 26th, changed from down to up on September 26th. So it wasn't, last week, it was the week before.
Right.
It started giving you that signal. If we do a zoom in, you can see right there.
Yeah.
Right there where the pink crosses the blue right there, September 26th. It's actually right back here. All right. So it's moving up, and it probably will continue. And we'll see what happens when it gets to the top of this cloud area, which is right about 4.1. But I think it's probably going to reverse and come back down again. And probably just go sideways for a while, actually.
Yeah.
So that's what that looks like. And all, gold's in here and bonds. Look at gold. Short term, gold's been doing really well.
Mhm.
way up there. Let me look at the commodities the next couple of minutes that we have
Mhm.
on this segment, because that's going to be part of CPI.
For sure.
The reason I say 2.3 and not down to 2.1 is if we look at commodities, you can see right here.
Ooh,
Um,
that's a significant move.
Yeah, change. This is actually copper. So this one's copper up here.
Got it.
So you can
King
see,
copper,
so that
they call it.
yeah. So you can see the gray area, or the blue area in there is what CPI is going to be reported on. That's last month, September to October. And you can see all of these commodities have been basically screaming higher in September.
Mhm.
Even gas and oil, although not much,
But they're up. Yeah.
but they did go up, right? And they are continuing to go up even into October. So because of this is why I'm saying we probably could get to 2.3 because of the big one that's dropping off and the base effect.
Right. Right.
Probably not 2.1 or 2.2 or anything like that.
Okay. I
So
like
we'll
it.
see how the commodities continue to go. But the other thing that I want to point out, because you mentioned it on one of your videos, is lumber.
Yeah, please.
So I just changed copper to lumber. So just imagine that says lumber. So lumber's down here.
Got it. I see it now. Okay.
So you can see, yes, it's gone up, but it not dramatically. And
No, not dramatically.
you can see how low it got.
It'll be interesting to watch lumber the next month, just given what what the East Coast is going through. That's a
Yes,
commodity sucking,
that's true.
you
Yeah,
know,
that's a good point.
thing.
Yeah, we'll see what happens with lumber. You can see it's actually started to roll over right there.
Yep.
But it is not giving any warning signs right now.
No,
Not to say,
I would agree.
not to say, well,
Yeah.
I mean, they got up as high as this back in March.
Yeah, the thing about lumber, and again, I'm no lumber expert, go to the uneducated economist who want your lumber updates. But what I'm most concerned about lumber is the mills that are producing it are shutting down or having what they call curtailment because they can't make money at these prices.
Right.
So
Yeah.
they shut down, reduce the supply, and then we have a supply shock, and we got no supply. You know,
Hey, it's economics 101.
yeah, exactly. It's like shocking that this happens. You can't make money at 200, you don't do it. And then there's no supply, and then prices go up, and we have this vacuum of, you know,
I think
no
the
supply.
I think the government should force them to keep producing. I'm just kidding. I'm just
Yeah,
kidding.
I know you're kidding. No, you're kidding.
All right. One other thing
That's good.
I want to look at,
Mhm.
go back to the market bias matrix to do this, is lithium.
Oh, okay.
So the mine in North Carolina was a crystal mine
Okay.
that's used for silicon wafers.
Right. Yeah.
And it's one of there are other ones. That's not the only one. There are other quartz
Yeah.
mines, but it's one of the few that has pure quartz.
Yeah. It's pure. Purity is the thing they had.
Right.
Yeah.
So that's key. But I did some research on it, and they're not really predicting to have any shortage or anything. Most of the
Okay.
chip manufacturers already have a supply built up, so they're
Okay.
not really going to be impacted. So I don't think it's going to have a big impact on
Okay.
chips. But lithium, interestingly, I looked that up too. There's only one lithium mine in the U.S.
Really?
It's in Nevada.
Oh, I didn't know that.
Now the government has funded other mines to get started, so they're looking at starting some new mines around the same area in North Carolina, but they haven't started those up yet. So the only lithium mine we have is in Nevada.
Hmm.
But let's take a look at lithium. So lithium on this chart, you can see it's a short-term bull, it's a medium-term bull, it's a long-term bear.
Okay.
But wait till you see the chart.
Oh, hello.
Look at that.
What the
Wouldn't
heck
you?
is going on there?
Wouldn't you? By the way, this is an ETF, LIT for lithium.
Wow. Somebody's doing good things.
Wouldn't you? Wouldn't you love to have been in back in here?
Absolutely.
Hey, guess what? That's where the short-term signal triggered. on
Look
my
at you.
on my market timing, my market bias chart. This
Yeah.
one right here. So in lithium right here, where it says bull,
Yeah.
that did say bear
Until that crossed. Yep.
till September 11th, right there.
Hmm.
And that's when it turned to bull. And if
Any
you were,
idea why? That's a violent move.
I think that I'm not exactly sure why this is happening, but I know that Elon Musk has been talking a lot about if you're a entrepreneur,
Oh, I heard that. Yeah.
the
Become
best, the 100% way to make money is to start mining
a
lithium.
lithium. Yeah.
Right.
Makes sense.
So I don't know if
Okay.
that has, this could just be momentum. It might not have anything to do
Oh.
with the fundamentals of lithium.
Oh, at
Could
this
just be
point, yeah, it's definitely momentum. Yeah.
just momentum traders jumping in.
Yeah.
But
Pretty wild.
you could have jumped in right there just by following that chart.
That's cool.
All right.
Very, very cool. Well, folks, you got to get the newsletter. It is weekly. It is must read. It is free. He puts it on the website. You can click on it. It is
By the way,
also lots of humor.
here's my cartoons.
Oh, you landed on our grocery bill.
Soft landing.
That's funny.
Flaps down, gear down, ready for a soft landing.
Oh, yeah.
I said the landing would be soft. I didn't say anything about fire.
Oh, I love these. I love these. These are great.
It's amazing to me that I keep finding all these new cartoons every week.
Well, folks, breakpointtrading.net. Go there for the newsletter. Stay around for the charts. Dan, we appreciate you each week. In the next one, we're going to talk about what stocks to pick for trading. That should be a lot of fun. Dan,
and
thank you so much.
also a subscriber asked me to talk about trailing stops. Also,
Awesome.
so,
We will do that as well. Thank you, buddy.